I'm going to show you a few signs on why shorting Bitcoin may be a good idea based on these things I'm going to show you guys right now. This is all purely just my opinion because things are a little bit rough, and I'm going to show you guys here a few things before we actually jump into the chart. We know that tariffs are still out there, they're strong, right? We're still not seeing an ease on tariffs, not yet, but I do believe that's going to come soon. A lot of these other countries just can't sustain these high tariffs for a long time, and eventually will be negotiated and kind of fixed up. Inflation isn't really taking much in favors of cutting rates. It's a little bit of a headwind right there. Yeah, CPI came in better than expected, but we're still seeing some rough roads ahead, especially since the CPI was that time frame was based off of pretty much everything before tariffs kicked off as well. So I'm pretty sure the Federal Reserve is going to be looking at that going into the future. We have the Federal Reserve this Wednesday, the FOMC meeting, and this is going to be, I believe, an hour before market close, so it's something to keep an eye on as well. And then just for some context, after the FOMC meeting on Wednesday, on Thursday we have an initial jobless claims, 5,000 above previous one, so 225,000 expected. Let's see how it goes. Unfortunately, seeing a bigger number is good news, so let's see what happens with that. But now when it comes to Bitcoin and why shorting may be a good idea, of course, with that mystery question of what is the Federal Reserve going to say, we know that the expectations are they're going to keep rates the same, but the question is, are they going to have a hawkish tone or a dovish tone, right? So now going forward, so you can get a better understanding, we know that Bitcoin ran up very nicely and it started consolidating sideways for we had to break a structure to the downside due to macroeconomic fear. So after this structure, we created a new structure. We broke below the previous swing lows, confirmed the new structure, came down quite aggressively, and now we've been trading in this sort of declining motion for a bit now. Now, with that being said, we know that, all right, we had a deep value test. We ran up quite aggressively. We maxed out these fib extensions really well and filled in some imbalances very well as well. And then we ran back down, got a deeper low into this deep value area. Everything under 80,000 is extreme deep value, in my opinion. Even though we are in deep value right now, we can still visit extreme deep value, possibly. And that's due, again, a lot of uncertainty, or it can just be due to more aggressive tariff headlines that can potentially come out, and of course what the FOMC meeting ends up being like, as well as those job reports. But we'll see how that goes. But with that being said, right, we ran up, we came down, started creating this sort of a triangle pattern that we broke down of to retest that deep value one more time. And then ever since then, we started a uptrend. Now, in order for us to try to confirm, and this is what's going to create a potential short opportunity, but in order for us to confirm that, hey, the low is in and we are going to start moving up higher, we need a sustained structure with enough volume to the upside to show that, hey, there is enough bulls taking over. And with enough volume, you have new supportive areas that can form. As of right now, we don't have that. In order to see that form, we want to see, so we have a first wave up here in green, numbers, second wave down, and we're trying to complete a third wave. As of right now, we've been trading sideways for a while. We haven't been able to reach up into the high 80K areas, 90K being a target for the third wave as an ideal target, roughly around 90. But we have not seen enough momentum to push the price up there. And if we don't have enough momentum to push it up there, then it's very easy to create bearish momentum and retest those deep values once again. And so far, the supportive area we're looking for in order to confirm a break below would be this retracement area right here from this move up. So what this means is that we have a first wave in, second wave in, so we have this structure in place. And this third wave that's sort of unfolding right now, this creates a structure to look at, and this is the retracement for that structure. So in my opinion, if we can't see enough bullish momentum to push up higher, it's very easy to create that bearish momentum. If we can break below the 82K, you can even be a little bit more flexible and say 81K, but below 82K at the 0.618, Any break below that will begin to trigger a lot of bearish momentum that can easily bring us down into the low 70s. Around 73k would be the low. That will mean that if we go down to 73k, potentially it will be decently dipped into this super deep value supportive area down here, which is extreme no-brainer accumulation area to buy. And 73k seems to be a very solid support uh, right now, being in the premium section of this, because this is extreme. Going out, even going down to the low 60s, even going down to the 60s is already extreme. So just to be realistic, just it's more realistic to assume that the premium section of this supportive area will fill. Just because we've seen these red areas fill perfectly multiple times in the past does not mean it has to happen again. And a lot of I say this a lot of deep value Bitcoin has been bought up and is being hodled. So as of right now, it doesn't really make a whole lot of sense that we can see such extreme sell off. But into the low 70s, around 73k, is a pretty good area to keep an eye on. If we do break below the 82k line, because at that point the pathway down becomes much more clear, and will create a more strength in those bearish orders that can flow into the market. With that being said, though, that's what I'm looking for. If we can't break up higher into this area, we can easily break up higher a bit. But if we can't break past the 87k level, then that means we can easily be rejected at 87k, 86, 87, and we can easily then see the price continue to fluctuate down and continue chopping back and forth, stagnating around as it tries to pick a direction. But that's a what if. Right. So the two pathways I'm really looking for is, can we hold 82k? Can we stay in this level, build enough momentum and to break up into like roughly 90k, so we can start looking at a more sustainable uptrend? And if not, then that means it's very possible that we can see a one more low scenario where we'll see Bitcoin fall, create a third low, so one more low before we can quickly recover like we've done previously 2 times in a row. So if we come down into that deep discounted area super easily, we can recover from it. But as of right now, that's sort of the pathway that I'm looking at. I may even take this short trade depending how this price unfolds to not just Tuesday tomorrow, but Wednesday as we approach that FOMC meeting, depending what the structure looks like from there. And I'll update you guys on that, on what that look, the potential trades, and it will most likely be during a live stream. But yeah, if we can't reach this area, then most likely bearish pressure to the downside once again before we can then finally start pushing up and consider these discounted levels to just be part of the past. So we're still trying to wait to see how that's going to unfold. So we're still trading the sideways structure. Let's see what happens, not just overnight tonight, but leading into the FOMC meeting throughout the next day and a half. So yeah, I'll catch you guys soon on the next video. And yeah, I hope you like this one. Take care.